Hi, ABD. I'm Meredith Heyman. This is Industry Insights. Thanks so much for joining me. What will the monthly job report numbers tell us about the U.S. economy in 2025? And what will we learn about the Fed, inflation, and possible rate cuts this year? ZipRecruiter's chief economist, Julia Pollock, is joining me to discuss how investors can best interpret this data. Julia, thank you so much for joining me.
Thank you, Meredith.
Absolutely. All right, let's jump in. How will an expected economic soft landing shape the job market in 2025?
Well, the economy is like a ship entering 2025 with the brakes still applied. So I do expect that we'll see job gains continue to slow and cool in the first few months of the year. Inflation, of course, is going into the year a little hotter than we had hoped, and that will likely sort of slow the rate cutting cycle in the beginning of the year, with 25 basis points expected every other meeting, but not every meeting as was once expected. Housing and insurance cost growth are the real drivers of inflation at the moment, but they are expected to ease later in the year. And at the same time, restrained consumer spending, weaker pricing power, strong productivity growth, non-inflationary wage growth, anchored inflation expectations, all of these fundamentals are likely to help support further disinflation in the year. So I think as we reach the middle of the year, you will likely see something of a turnaround.
Coming up very soon, how will a new president influence the job market?
So, on the one hand, business optimism is high in anticipation of tax cuts and deregulation. On the other, well, the bond market is a bit jittery, worrying about the possibly inflationary effects and the effects on the deficit of tax cuts, tariffs, and immigration restrictions. What we could see is that it all depends on how the president's agenda pans out. If the administration is able to cut spending and show that the fiscal path we're on is becoming more sustainable, well, in that case, I think the Fed will have tremendous room to cut rates, and that business optimism will be fully unleashed. If, on the other hand, we see very, very tight immigration restrictions and disruptive tariffs, well, that could cause a resurgence in inflation at the end of, later in the year.
Now, Julia, you already started to get into this, but how will new inflation trends influence the job market?
So, inflation is heavily influencing the job market, and that's because the Fed has raised rates substantially to cool the economy and cool inflation. And the result has been a 2-year slowdown in the labor market. At first, that slowdown was a normalization from the heady heights of the Great Resignation, the tightest labor market in US history. But now it has continued to slow. In the second quarters and the third quarter, job growth was well below the pre-pandemic average. Job growth has also become very, very narrowly concentrated in sort of healthcare and government, and most other sectors are either just flatlining or even moving backwards. And so this is a very odd labor market where job growth is quite slow now, and where the underlying dynamics for quits and hires are even slower than the top line figures would suggest.
Now, what's your prediction for job creation in the job market based on some recent online hiring trends?
So, online hiring is still slowing, but sentiment has very much turned around, and we're seeing tremendous optimism among employers in our various employer surveys. The vast majority of employers expect to increase wages this year and to increase hiring. And that is quite a turnaround from the last 2 years, where there was much more of a focus on containing costs and being very sort of cautious and in anticipation of a downturn. As we head into 2025, the brakes are applied to the ship, but tailwinds are building that could actually overcome that deceleration and push this ship forward again. And those are things like falling interest rates, rising consumer confidence, real wage growth, right? Workers saw their wages fall in real terms for 25 months earlier in the pandemic. But now they've had almost 2 years of positive real wage growth, and that is going to boost consumer confidence. The stock market has also been on fire lately, and that is going to boost consumer confidence too. And all of that will likely strengthen labor demand towards the middle of the year.
Another huge trend. How is the widespread adoption of Gen AI and the AI revolution influencing the job market?
Well, there is tremendous demand for highly skilled workers with AI skills. And at the same time, we haven't seen the sort of doomsday scenario of job destruction take place. So for now, this is still quite a rosy force behind the labor market, with more employers expecting that technological trends in their industries will support headcount growth than headcount cuts.
And finally, how can investors best navigate the job reports data in 2025?
So we have an aging population, and for that reason alone, we should expect job gains to slow. They should ease to around 100,000 monthly pace. Let's hope that what's happened recently with building labor market slack ends, and that the unemployment rate sort of tops out at around 4.3, 4.4%, and then starts coming down. Of course, seeing that rate go up should worry everyone, because there is sort of a historical regularity in the unemployment rate trends. If unemployment rises too much, well, it tends to rise even more and get into a vicious cycle. So if that can be avoided, well, then I think we should be very bullish about 2025 and the years ahead.
Absolutely. Well, Julia, we'll be watching. Thanks so much for joining me. This is Industry Insights. I'm Meredith Heyman. Stay right here on IBD for more. We'll see you next time.